And it's the last one for the week. Hello and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, the central bank's directive last Friday to banks concerning the cryptocurrency market is still making the rounds. Now, the Securities and Exchange Commission has come out to respond to several comments and inquiries from the public on a perceived policy conflict between its September 11, 2020 statement on digital assets and classification and treatment and the CBN circular of February 5, 2021. Now, SEC, the apex regulator of the nation's capital market, says it decided to provide regulatory certainty within the digital asset space last year due to the growing volume of reported flows. SEC had in September last year described digital assets, including crypto assets, as securities, saying it would regulate them. In a statement released yesterday, the SEC said, and I quote, "We see no such contradictions or inconsistencies in recognition of the fact that digital assets may have the full characteristics of investments as defined in the Investments and Securities Act 2007. The SEC statement asserts that trading in such assets falls under SEC's regulatory purview, except proven otherwise. It first says the primary objective of the statement was not to hinder or stifle innovation, but to establish standards of ethical practices that ultimately make for a fair and efficient securities market." End of quote. But the capital market apex regulator, however, says they have engaged with the CBN and agreed to work together to further analyze and better understand the identified risks to ensure that appropriate and adequate mitigants are put in place should such securities be allowed in the future. Well, SEC said for the purpose of admittance into the SEC regulatory incubation framework, the assessment of all persons and products affected by the CBN circular is hereby put on hold until such persons are able to operate bank accounts within the Nigerian banking system. According to the statement, the planned implementation of the SEC regulatory incubation guidelines for fintech firms intending to introduce innovative models for offering capital market products and services would continue. Well, again, Ladi, you see, I saw this report on CNBC captioned, "Dwindling cash use is pushing central banks to race towards digital currencies." Now, this is a survey by the Bank of International Settlements published earlier this year, and it shows that 86% of the 65 central banks it spoke to are doing some form of work on central bank digital currencies, be it research, proofs of concept or pilot development. So I'm just wondering where the conflict here.
It shows that at least these central banks are looking into this new technology.
And that's exactly what the regulators we have here should be.
So
really
SEC is trying to protect investors. The CBN trying to protect
still trying to protect, of course, and protect investors as well. But they just have to look at the nitty-gritty of this market, really.
Well, in the meantime, the Senate has invited the governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, to brief about his decision to ban financial institutions from transacting in cryptocurrencies. The CBN governor is to appear before the Committee on Banking and ICT, Cybercrime and Capital Market, and these committees are to report back to the Senate in 2 weeks. Let's take a listen.
The Senate notes that the CBN has issued a directive stopping all financial institutions from transacting in cryptocurrencies. The Senate further notes that the decision of the CBN is said to have been predicated on the need to safeguard Nigeria's economy from the adverse effects of the current cryptocurrency regime, which are unregulated digital or virtual currencies that are issued by anonymous entities and secured by cryptography. The Senate, being aware that the action and directive of the CBN has attracted sharp reactions from Nigerians and has become a topical subject of national discourse. And the Senate realizes that cryptocurrency is both an opportunity and a threat. Hence, the Senate has a responsibility to ensure that the nation and citizens do not miss out on the opportunities that cryptocurrency offers, and in the same vein, mitigate and prevent likely consequential effects on the nation's economy and security.
And despite federal government said removal of petroleum subsidy, the chairman of the major oil marketers of Nigeria, MOMAN, Mr. Adetunji Oyebanji, says about 1.3 trillion naira, which could have been directed towards infrastructural development as well as construction of refineries in the country, is paid as subsidy by the NNPC. Mr. Oyebanji believes that this is not sustainable and the full deregulation of the downstream sector is imminent.
If crude oil goes up by $1, what is my expectation on the price of gasoline at the pump? Should it go up by 50 kobo because of that $1? And it's not an exact science. Why it's not an exact science is the interplay of market forces now coming. When we say 30% of foreign exchange is going on buying product, today, if the calculation, it's 50 million liters a day, even though today it's actually gone to 70 million. If you multiply that by, say, 50 naira a day, 50 times 70 million liters is how much we are using to bridge that gap daily. It is the same money that NNPC that we say should repair the refinery is wasting to absorb this cost. How are they ever going to repair the refinery? Where will the money come from when they are wasting all the money? Don't forget, those refineries, they employ about 5,000 or 6,000 people. Every month they are collecting their salary. Our solution now is that, well, since we don't know what is happening, the best thing, let them continue this subsidy. Because while we are doing that, we are dying instrumentally. Although we are not feeling it in our pockets on the price of petrol, we are all feeling it in how the country as a whole is deteriorating. We all know it's deteriorating. Whether it's traffic, whether it's insecurity, whether it's all these things, when you add them, poor health facilities.
Well, earlier this week, the chairman and founder of the Boer Group, Alhaji Abdul Samad Rabiu, attributed the high cost of cement in Nigeria to low production capacity and called for the liberalization of Nigeria's cement industry to boost production and subsequently crash the price of the commodity. Well, according to him, the government needs to take a second look at Nigeria's cement policy to see how it can bring in more companies to participate. Well, we'll be dissecting these issues. Bismarck Rwani, CEO of Financial Derivatives Company, joins us next. Mr. Bismarck Rwani, CEO of Financial Derivatives Company, joins us now to weigh into the issues in the cement industry in Nigeria. Thank you very much for joining us, Mr. Rwani. Good morning.
Good morning. Thank you for having me.
So there's been a lot of controversy as to what is oligopoly, monopoly, and perfect structure. What is the difference between these market structures and how good or bad are they for the country?
First of all, let's start with basic principles. The difference between a monopoly, a duopoly, oligopoly, and perfect competition is just the number of buyers and sellers, and it's all about determining an efficient price where consumers are not exploited. The worst form of market structure is a monopoly, and the worst form of monopolies are state-owned monopolies. The reason why is that the monopoly is the only supplier, and while there are many buyers, so they have a tendency to exploit consumers by pricing them above the market and not investing in research or anything because they have no competitors. So that's monopoly. But there are some monopolies which are what they call state-owned monopolies or welfare-inspired monopolies. Okay, then like Aramco in Saudi Arabia and some other areas. But having said that, the history of economics shows that at a point in time, almost all governments fought against monopolies and therefore went towards competition. Now, the second form is duopoly, which is two players, and the third form is oligopoly, where there are a few players and many buyers, and then perfect competition is like the cryptocurrency where everybody can come in, everybody can go out. And so that's the difference between these various factors. But what you must bear in mind, and viewers must bear in mind, is that typically what the consumer wants to have access to a product, access to a good price, and access to go in and go out whenever they want it. That is the fundamental differences.
Okay, Mr. Rwane, it is widely believed that in an oligopoly market structure that the consumer is always exploited by the producers. Can you say that is true for the Nigerian cement manufacturing industry?
No, I think that at times oligopolies actually exploit consumers if they collude, because there's a law against price fixing. That's why they have the Consumer Protection Act. If MTN and Airtel and Glo and Nine Mobile come together and start to fix prices, the NCC will come against them, even though it's an oligopoly in that case. But you find that once there's competition amongst oligopolists, the consumer is not exploited. As a matter of fact, prices begin to come down and everybody begins to actually pass on the cost efficiencies to the market. So I'm using the telecoms as an example, but when you come to the cement industry in Nigeria, there are three major players. There's Dangote, who is a dominant player. There's Lafarge, and there's Bua. Are they colluding to fix prices? No. Are there barriers to entry to stop anybody from coming in? No. Because the only barrier to entry is actually the level of capital required. You need about almost $5 to $6 billion to commence an efficient cement operation. So it is not true totally that consumers are exploited, but it is also possible if there's collusion. But that is one of the reasons why the Consumer Protection Agency will not allow that.
So some are of the view that at 3,600 naira per bag of cement, that there is some price gouging. Do you share that view, that the reasons why prices are high is because there is not enough players in the industry?
No. 3,600, you see, the price of cement was 2,500 for over 2-3 years, when inflation was actually rising at about 11-12%. Now, the dollar was actually stable over that period. In the last year, you've seen about a 25% increase, adjustment in the value of the currency. In other words, the currency lost about 25% of its value. Now, if you adjust for that, even though the content, the inputs are not imported, but the equipment themselves are imported. The equipment were bought in dollars and are amortized and depreciated over time. Therefore, if you go from 2,500 to 3,600, especially in the dry season, which is when the demand is high, then it's not gouging, but I think we've seen the price begin to reduce. At the same time, a bag of onions went all the way from 17,000 all the way to 80,000 and is now back to about 25 or 30,000 naira. So making a case for cement being a result of gouging is not necessary. It's not an accurate postulation this time. The point is that the cement manufacturers also employ a significant number of people. They employ over 100 or 200,000 people, all of them put together, and therefore to keep them going and keep them working, even in the pandemic era, should be taken into consideration.
Okay, looking at trade now, Nigeria is almost a net exporter of cement today from being a net importer about 20 years ago. What is responsible for this transformation?
Well, I think the thing is that if you look at the graphs that we have with you there, you will find that the total production of cement in 2010 was about capacity was about 2.2 million tons. In 2011, it expanded to 23.75 million tons when Dangote entered the industry. With some backward integration, we got to 28 million tons. Today, the combined capacity of all of these parties put together is about 50 million tons. So Nigeria, yes, is now a net exporter, and because of the cost efficiencies, you cannot import cement and be competitive. And I want to go back to the point I made about barriers to entry. The only protection that has happened is that you are not allowed to import finished cement into Nigeria. Nobody has stopped any other person from coming to manufacture. So the notion that there is a barrier that you need a license to come and manufacture cement or set up your manufacturing plant is not correct. The truth is that everybody, you can go in, but the point is that you need about $4 or $5 billion, and not everybody in this country can invest $4 or $5 billion. For your information, the combined market capitalization of the three companies is 6.95 trillion, which is 32% of market capitalization. So you can imagine their combined turnover is over 1 trillion naira a year, even in these times. So it's something that we have to understand, that the only barrier to entry it's not a regulatory barrier to entry. It is capital that is a barrier to entry.
All right, Mr. Rwani. Now, the African Continental Free Trade Agreement has kick-started, and I remember that last year, Dangote Cement, of course, started exporting clinker. How much impact has that had on this industry so far, and what is your outlook considering the AFCFTA now?
Well, I think even before the AFCTA, Dangote is already operating, not only exporting, operating and in 14 African countries, in difficult places like Ethiopia, Senegal, South Africa, which is highly competitive, competing against IXM and all these other major players in the world, right? Not only in Nigeria, but across Africa. So I think in anticipation of the African Continental Free Trade Agreement and knowing what was going to happen, people like Dangote and others had actually gone in there and taken the political and commercial risk to invest in these countries and become in the end, they will become net exporters and therefore be bringing dollars into Nigeria. So, and this is not, without prejudice to the refinery, fertilizer, and other investments that the Dangote Group have made in the export free trade zone there. So when you put all of this together, you find that the strategic intent of having an Afrocentric blueprint is what Nigeria and the likes of Dangote and Bua and Lafarge are taking advantage of. So one, satisfy domestic demand. Two, be competitive enough to compete, to actually sell aggressively across Africa. And because the African Continental Free Trade Agreement says that if the goods originate in Africa, you pay no 5% duty. And so you take advantage of this and you begin to actually consolidate. And so in the end, we think that Nigeria will be a hub for manufacturing cement, will be a hub for refining, be a hub for petrochemicals, be a hub to some extent for banking, and to a large extent, some basic commodity and agricultural raw materials. So I see that as a big plus for Africa, and especially for those visionary like the Dangote Group. And I'd like to spend a minute talking about the revenue profile of these three companies. You find that of the 1 trillion naira, 761 billion naira of this, that is 70% of the turnover of this 1 trillion naira Dangote has, and WAPCO, which is Lafarge, has a 179 billion, and BOA has 156 billion. So the two of those guys put together have 300 billion, while Dangote has about 761 billion naira. So you can see the dominance there. The 1 year return on the shares of Dangote is about 25%. The return on WAPCO, which is Lafarge, is 68%. And that of BOA is sterling 104%. But again, 104% on a smaller number, 68% on a smaller number, and 25% on a huge number of 761, something that we need to think about. But all of these companies are doing very well. Like I said, they have almost 32% of total market cap. So again, coming now to answer the question on African Continental Free Trade Agreement, 1.2 billion people, almost all these countries have an infrastructure gap. So you will find that we need to build roads, affordable housing for this 1.2 billion people. They need to build infrastructure. They need
Mr. Rwani.
Yeah.
I guess you're able to. We really don't have much time now, but thank you very much for spending your time with us this morning.
Thank
we'll
you
take
so
a
much.
quick break now, and when we come back, we'll look at the electricity sector. Do stay with us.
And the $500 million support fund from the World Bank is expected to help boost electricity access by improving the performance of the electricity distribution companies through a large-scale metering program desired by Nigerians for a long time. Mr. Ahmed Zakari, Special Advisor to the President on Infrastructure, joins us now. Thank you for joining us, Mr. Zakari. Good morning.
Good morning. Happy to be here.
Good morning. So you are the President's Special Advisor on Infrastructure, and your office handles the funding for the metering project for electricity consumers. Where are we with this project today?
Yeah, I think, the challenge of metering is the one that impacts our citizens directly. President Buhari has maintained that at the end of this administration, every Nigerian that doesn't have a meter, we will work assiduously to close that 6 million metering gap. Where we are today is we've assessed the metering gap through the support of the Central Bank of Nigeria in partnership with the Ministry of Power and the regulator, NERC. We're working with the discos to provide them financing so that they can roll out these meters to citizens free. Thus far, we've disbursed about 18 billion naira, which has been used to procure about 350,000 meters. That is in the phase 0, which will distribute about 1 million meters over the next few months. And then we'll move to phase 1, which will be another 4 million through a similar financing scheme. And then the balance will be covered through this World Bank facility, as you discussed. So we're very confident before the tenure of this administration that we will close this metering gap and Nigerians will have a more transparent method to get their power and be able to pay for it effectively.
Right. Talking about the World Bank facility, which was approved, that's about $500 million, not just for support for metering. Of course, there are other areas that this fund is supposed to be channeled to. So how do you hope to channel this money for this purpose to achieve its real aim?
Yeah, I think we need rapid, accelerated funding in the distribution sector, and that's what this government is focusing on. The distribution sector is the closest to the consumer. It's the closest to our citizens. And we like to say in the administration that if the power sector doesn't work for the citizens, then it doesn't have any purpose. We need to make sure that investors can make their money, but as well the citizens feel the impact. So if you look at what we're doing, I think the assessed gap is about $10 billion. We've come up with multiple schemes to rapidly infuse funding into that segment of the value chain. Through the leadership of CBN with the banks, there's an emergency fund that's being used to upgrade critical feeders in line with the service-based tariff rollout to make sure discos can meet their band A, B, C, and below commitments. We have the World Bank funding now that will also be used for infrastructure, all these transformers in different neighborhoods that are challenged, lines, just so the citizens can feel the impact. And then also in addition, we have the Siemens Presidential Power Initiative that will also bring funding in to ensure that all the improvements to make sure that our distribution capability matches our generation capability as well as transmission are done. But for anybody that says we should only focus on one funding scheme, that is a very wrong way to think. we have a large gap, and we're using all of these funds in an accelerated manner to make sure that the citizens feel the impact as quickly as possible.
Looking at the challenges, privatization has been touted as the most viable way of solving the problems in the electricity sector. Why has solving these problems become such a challenge after so many years?
So I think that's a great question. And I think you probably have heard in a few instances, the Minister of Power has mentioned this issue of better coordination. When we went on this reform journey in 2005 with the assent to the Electric Power Sector Reform Act, it created a distributed leadership and many players in the sector. And part of our challenge has been ensuring that all those players are moving in the same direction. Through the leadership of President Buhari and his wisdom, he put together a power sector coordination working group that's led by His Excellency the Vice President, is co-chaired or vice-chaired by the minister, and it includes the Minister of Finance as well as the Central Bank Governor and His Excellency the Governor of Kaduna. I'm the secretary for that committee, and we pull in multiple stakeholders, and you can see now that with improved coordination, we're beginning to see the results. We need to make sure the investors can make a return, but their impact to the citizens is also there. So the DISCOs have also been working. We've taken a carrot and stick approach. Was reported today that we've broken the record in terms of collections in the sector, partly because we've sequestered the funds for the sector into a lockbox, so to say, with CBN, and we're ensuring that generation and gas are getting their money. The DISCOs can earn a return, but there's much more transparency in the sector. So I think this point of coordination, we're seeing the benefits. And as I said, our leaders in the government are all working together constructively to make sure that we reach the right outcomes for our citizens.
Right, you did mention the different bands in the electricity distribution. Now, there have been some kind of complaints by Nigerians about the recent service-based tariff, which the government has stated is one of the ways through which improvements can be made to the sector. Now, can you elaborate on how paying a higher tariff will actually improve service and the sector in general?
Yeah, I think I've been on, channels before and other programs and have stated that the service-based tariff should not be viewed as a tariff hike. It should be viewed as a change in the pact between consumers and service providers in the power sector. We're saying through SBT that an individual that's enjoying 20 hours, 24 hours of power should pay the appropriate rate, a cost-reflective rate. Those that are maybe 16 to 20 or 12 to 16 should pay graduated lower rates, and then government is still subsidizing fully the band D and E consumers where we feel they're not getting service. But we're now seeing the impact of these changes. As I've said, we, on aggregate, even with the subsidies, have raised tariff by about 36% on average. But the collection number for DISCOs over the past few months has jumped by 64%. This is ensuring that there's more money in the system for investments. And also, if you have a DISCO with a balance sheet and is earning revenue, it allows for them to be able to have enough revenue to invest in their network. They can have enough balance sheet strength to take on the weight of the loans that is their responsibility. But I will assure you, any DISCO that fails to perform with all the measures that are being taken to support them will lose their license and will find investors that are better equipped to manage it. But thus far, our hypothesis that having a pact that is linked to service, having cost reflectivity for those that are enjoying it, and creating a transparent network to manage the revenues in the sector, we see the numbers. It's bearing fruit. The DISCOs collected 65 billion naira from the last billing cycle, and we're on a path to get the collections number this year up to 100 billion naira. And that'll be more jobs, it'll be more investments, and it'll be better power for our citizens.
All right, Mr. Zachary, let me get your outlook for the sector. When can Nigerians have 24-hour power?
If we continue along these reforms, we will successively see that we will phase out any discussion of bans. Everyone will be in a band that is 20 to 24 hours. I think if we continue across this trajectory, we'll see appreciable gains by the end of the life of this administration, where our key urban areas will have stable power. And subsequently, if we continue across this trajectory, I think in 3 to 5 years' time, we can be in a very different place. But that's why we're working with organized labor. We're working with the DISCOs. We're working with the regulator. Our leadership in the ministry, as well as at the villa, is driving everyone. We must work together. There will be carrots if you perform, but we do have a big stick that we'll wield if you don't perform. So I'm very optimistic on the outlook, and we'd like to encourage Nigerians to support President Buhari and the administration in its vision and actions to get everyone stable power in the country.
Okay, we're sharing your optimism there, and we wish you all the best. Thank you very much, Mr. Zachary, for sharing your time with us today.
Thank you.
Thank you.
Okay, let's look at the market. Eddie, some cherry picking there yesterday, and then we saw the bull, but just worried how sustainable will that be, considering that the market breadth is still poor.
But Chimi, if you took my advice yesterday to buy Dangote cement stocks, by now you would have been up by 7%. But then just like you've said, yesterday we just saw gains on Dangote cement and MTN Nigeria. It wasn't surprising that Dangote cement would leave the market yesterday because of the 7% decline on Wednesday. So of course, investors were going to take advantage of that. But how long this will be sustained, we do not know. But let's talk to Mohammed Jamiu, the head securities dealer at APT Securities and Funds. Good morning, Mr. Jamiu. Also, I hear we do not have him yet. But yesterday, the market was up 0.78% at 41,014.30 points. Now, that pushed the month-to-date gain to about, the month-to-date returns moderated to about -3%, while the year-to-date gains rose to about 1%. The equity cap was at 21.456 trillion naira. Now, we had increase in volume, value, and deals traded yesterday. We saw 1.27 billion units worth 6.39 billion naira. And MTN contributed about 1.5 billion naira to this total value yesterday. And we saw 6,573 deals. But let's talk to Mohammed Jamiu, the head securities dealer at APT Securities and Funds. Good morning, Mr. Jamiu. Thank you for joining us on the program. Hello, Mr. Jamiu. Can you hear me?
Yes, I can hear you.
Okay, so yesterday we saw a lot of bargain hunting in Dangote Cement and also MTN Nigeria. Now, for Dangote Cement, that was not surprising due to the declines we saw earlier. But what should we be expecting in the market next week? I mean, we've had 8 consecutive sessions of declines. Should we be seeing some bargain hunting next week?
No, what we expect in the market is not another hunting in the week coming, because of the fact that you can see a little rebound from the market, though from the heavyweight stocks in the market. That does not mean that we continue to see bearish market going into the future. You can see that market has returned to positive, and we expect that it continue to be on positive. If you look at the trend in the market yesterday, you see that volume grew by more than how many percent? More than about 1.27 billion. We saw a value traded also grew by 16.67%. So all this is a pointer to the fact that the market will surely return to the bullish trend going into the week coming.
All right, Mr. Jamiu, thank you for your input on the program. Have a lovely weekend. Mohammed Jamiu is the head of securities dealing at APT Securities and Funds. Now, yesterday we can see clearly that the gains were due to the bargain hunting on Dangote Cement, which drove the industrial goods sector by 2.57%. All the other sectors posted declines. Banking sector was down 2.98%. We saw declines from all tier 1 lenders. Consumer goods was down 0.32%. We saw declines from Dangote Sugar, from flour mills and honey flour. Insurance was down 2.93%, while oil and gas was down 0.90%. The bond market sustained its bearish sentiment yesterday as we saw declines in yields by about 6 basis points. And of course, that was due to the increase in the yields at the primary market auction. So investors, focused on that market. And then we saw declines in yields there. We had 10 deals worth 12.05 billion naira. The Nigerian Treasury bills market was a bit quiet yesterday. We had 16 deals worth 6.05 billion naira. But let's talk to Bankole Odusonya, the head of fixed income at UBA. Good morning, Bankole. Thank you for joining us on the program.
Good morning.
EcoBank Nigeria announced the pricing of its senior unsecured $300 billion bond, which will be listed on the London Stock Exchange. Now, could you just give us more details about that and what impact it would have on the company here?
Yeah, it was a $300 million Eurobond issue, very successful. They got oversubscribed to the tune of about $1 billion. And then they were able to raise this fund at 7.1% compared to what First Bank did in 27th of October last year, where they raised these funds at 8.6%. They have raised at 7.1%, which is lower cost, reduced cost. What it means largely for the economy is that the debt management office is also looking into that space to raise some funds. It's about 50-50. They plan to raise about half of their debt plan, the debt medium MTEF plan for this year in foreign currency. So they will be looking at this space. And then it's good news that the rates have dropped for a 5-year Euro bond from 8.6 to 7.1%. So that's the major highlight of that issue.
All right, Bankole, thank you for bringing us up to speed on those details. Bankole Odusonya is the head of fixed income at UBA. Well, Chimi, that's good news for EcoBank, and we hope that we'll see more of that from other companies. But that's the market for this week. Hopefully, we see some bulls in the market today.
I'm very optimistic. What has started yesterday will surely continue into the other sectors that saw red yesterday. Hopefully, we'll see green. All right, we'll take a quick break, and then when we come back, we move over to London, where we'll speak to Juliana. Okay, let's speak to Juliana for update coming from the Street of London. Good morning, Juliana. Well, UK records worst fall on record as GDP shrinks 9.9% in 2020. That was expected, wasn't it?
It was expected, Chimi, but it's still a huge slump, 10% almost of a contraction in GDP. The headlines in the UK are screaming that this is the worst recorded slump since 1709. It has been felt, of course, it's being felt by families across the UK. It's being felt by businesses. But if you look at the bigger picture, there are kind of a couple of things that stand out. First of all, we haven't gone into that double dip recession that a lot of people had expected in Q4, the final quarter. GDP actually grew by 1%, much better than anybody had expected. But if you look at the other G7 economies, that's where Britain is really lagging behind. Germany, for example, the biggest European economy, is doing so much better. The US, even with that record-breaking stimulus, appear to be bouncing back so much better. And Of course, Britain is still in this ever-long third national lockdown. We don't know when we're coming out of it. And it's the lockdowns that have really squeezed the GDP so much. So I suppose, Chancellor Rishi Sunak has got a big weight on his shoulders when he releases that budget.
Well, I guess the markets will be digesting those numbers now. We hope to talk about it later in the day. But then the Chinese telecom giant Huawei is taking HSBC Bank to court in the UK as part of its attempt to prevent the extradition of its chief financial officer from Canada to the US. Are we following this story? What do we know?
Well, yes and no, because it's a very complicated story, and it's a diplomatic row, really, between China, Canada, and the USA. And it does involve, as you say, Meng Wanzhou, who is the chief financial officer of Huawei. She's actually the daughter of the founder, which makes the story even more complicated. And it stems back, this particular proceeding that's going to be taking place in the High Court today stems back to a meeting in 2013 between Wanzhou and HSBC executives. And now what what Wanzhou's lawyers are asking the court is to release details of that meeting under the Bankers Book Evidence Act. So they're not taking HSBC to court, but they want to access some of HSBC's records because they believe information was tampered. And again, this goes back to the US accusing Wanzhou of selling information and telecoms communication apparatus to Skycom, which is part of Iran. And there were sanctions at the time. So yes, it's a very complicated criminal case.
And reports indicate Amsterdam has overtaken London as Europe's largest share trading center. And experts say the symbolic blow could be followed by the city losing jobs as well as more businesses owing to Brexit. Does this corroborate BOE's chief's warning that there were signs the EU planned to cut the UK off from its financial markets?
Well, absolutely. It is all down to this law of equivalence. And since the UK left the single market, there have been new rules of trade. So any EU-based banks cannot trade euros in the London Stock Exchange. And this has seen literally overnight Amsterdam take over London as being the financial capital of Europe. The report that was released yesterday showed that per day, on average, in January, 8.65 billion euros was traded in London, and that's compared to 9.2 billion in Amsterdam. There is this argument about equivalence, and Andrew Bailey mentioned it, Boris Johnson's spokesperson mentioned it yesterday, that they don't want the EU playing any dirty tricks. Of course, there is going to be this a huge spat, but they are trying to come together and pull some sort of equivalence regulation. I believe a deadline is due in a couple of weeks. But this was one of the fears, and the fact that the financial services was completely removed from the Christmas Eve Brexit deal. This is part of the consequences of that.
All right, Juliana, we're not done yet. I'll talk to you later in the day.
Thank you.
Okay, let's look at the cryptocurrency market. Ladi, when are we hitting this 50K target in Bitcoin?
Well, Chimi, it's Valentine weekend. Who knows? We might just get our Valentine gift as a 50K Bitcoin. Let's see how the weekend plays out. Let's take a look at the numbers now. The market cap, $1.438 trillion, 24-hour volume, down 3.95%. $211.28 billion. Bitcoin dominance up 0.75% at 61.46. Let's look at the price of Bitcoin, still ranging between $44,000 and $48,000, up 5% an early trade, $47,399. 24-hour volume stands at $87.91 billion. The bulls are still pushing. We see the alts are still gaining some momentum. GRT, the graph, up 95% this morning, $2.71. Interesting thing about GRT was trading at about 18 cents in December 2020, now $2. Nano, The one for Speed up at $7, up 55%. BAT, basic attention token, 66 cents, up 45%. Ocean, $1.24, up 36%. And Engine, the gaming platform, up 34.57% at 58 cents. Let's look at the top losers. QTOM, down 13% at $7. Elrond did a rally recently. It was up about 100% earlier in the week, down 13%. That must be some profit taking. We have Cake. Cake is down 12%. That's the decentralized exchange. AVAX at $49, down 10%. So the altcoins are not looking so bad. Bitcoin, still ranging, allowing the altcoins to play a little. But this weekend, we never know. We could have a 50K gift if the bulls are given the chance to reign this weekend. Anyway, we'll be talking to Gaius. I don't know if we have Gaius yet. Gaius Chibueze, do we have Gaius?
I'm live here. Good morning,
Gaius,
Mr. Williams.
Great to have you. Good morning.
Yes.
So, Gaius, I heard that the mayor of Miami is investing some of their reserves in Bitcoin and is going to allow individuals to pay taxes in Bitcoin. Tell me about that.
Okay, so we woke up to that news. It's been a very exciting news, especially for those of us in the crypto space in Nigeria. This came as a very good news to the space in times when the government of Nigeria is trying to crack down on cryptocurrency. So we woke up to that news this morning, where the mayor of Miami has said that they are going to be paying their workers some part of their salaries in Bitcoin, and they're also going to be buying and investing some of their reserves into Bitcoin. So as I said last time when I was on this call with you, from all indications of what is happening around the world, Bitcoin is actually the future.
Anyway, it's a Valentine weekend. When are we seeing 50K?
Yeah. We have actually been expecting it for a while now, but I'm sure it's going to happen before the end of next week. The bulls are just piling up their bags, waiting to push it up once. It's been testing. It's been trying to test 49 before it makes it to 50. So we should be expecting it to use that to do Valentine for us.
Yeah. All right, guys. Thank you so much for coming on the program. Let's hope for a 50K Valentine. Thank you. All right, Jimmy, that's it.
And for me, Laddie, I'm expecting some kind of Valentine gift from you.
Okay.
And one Bitcoin, deal or no deal?
One Bitcoin. Okay, maybe if it hits 50K, maybe.
No, one Bitcoin, whether 50K or not, is a Valentine gift.
Let's see how it goes.
Okay, and then it's okay. It's also interesting to look at some of those currencies. You talked about the GRT, the Nano, and all of that are in the dip now, so to say. Perhaps is an avenue to also play.
Buy the dip. Buy the dip. When you see the dip, buy the dip.
It's a weekend, and it's the last one for the week. Thank you very much for being part of it. I'm Chimeze Obi Iwago.
And I'm Laddie Williams. Enjoy your weekend.